Namaskar. Today, I Rajesh Meena, Deputy Director of Income Tax Public Relation, Directorate of Income Tax Public Relations, Publications and Publicity, CBDT, New Delhi, welcomes you to a special Samvad series. In today's session, we will discuss the important points to be kept in mind for compliance while filing the quarterly TDS statements in the fourth and final quarter of financial year 25 and 26. To guide us through this important subject, we are privileged to have with us two distinguished officers of the Indian Revenue Service. First, we are honored to welcome Sri Rizwan Khurshid IRS, a 2004 batch officer who is currently serving as Commissioner of Income Tax. Sri Khurshid brings with him a extensive experience and deep expertise in the field of tax administration and compliance. We are also delighted to welcome Sri Amish Shukla, IRS, a 2009 batch officer who is presently serving as Additional Commissioner of Income Tax in the TDS vertical in New Delhi.
Welcome, sir. It is a privilege to have you here to discuss the importance of Q4 TDS statements. I'll start with the first question. What is the importance of TDS statement for the fourth quarter of a financial year?
Namaskar. Amit, actually it is very important. Let me elaborate. The legal architecture of TDS or TCS payment operates like this. A person obliged to deduct TDS deposits such TDS through a challan and thereafter files quarterly statements about such recurring challan payments. As you know, we have Form 24Q for TDS on salary payments, Form 26Q for TDS on payments other than salary, Form 27Q for TDS on payment to non-resident like dividend, interest, royalty, and Form 27EQ is for TCS payment, that is tax collection insurance. Then on the other hand, we have challan cum TDS statement. These are mostly for one-off kind of payments. We have Form 26QB for TDS on sale of immovable property, Form 26QC for TDS on rent payments, Form 26QD for TDS on payment to contractor by individuals and HUF for personal use, and Form 26QE, QF for TDS on transaction related to virtual digital assets or VDA, what we generally call cryptos. Now, what I explained in the first part, regular quarterly TDS statements are filed by the deductors for showing the details of all the tax deducted from payments made to others. These details of recurring challan payments are shown in all four quarters, what we generally call Q1, Q2, Q3 and Q4. In this respect, at the time of filing of the TDS statement for quarter 4, care should be taken towards fulfillment of legal obligations as enshrined in the Income Tax Act 1961. As you are aware that the earlier 6-year timeline for filing of correction statements has been now changed to 2 years. So, deductors should utilize the opportunity to file Q4 statements by not only ensuring correct Q4 statement, but to see if they need to correct earlier filed Q1, Q3 or Q3 statements by filing correction statements. For deduction against salary payments, unlike other quarters where deductors file Annexure 1 with Form 24Q, Q4 statement requires Annexure 2 of Form 24Q, which provide detailed employee level annual income and deduction exemption information. This is very crucial for final tax computation as it enables traces to generate accurate TDS certificates, whether Form 16 or 16A.
Thank you, sir, for giving elaborate and comprehensive background. Now I move on to the second question. What are the important due dates for filing TDS statement for fourth quarter?
Yeah. Section 200 of the Income Tax Act 1961 states duty of person deducting tax to deposit TDS amount within due date to the credit of the central government. It is prescribed in Rule 30 of the Income Tax Rule 1962 and afterwards to file TDS statement within due dates as prescribed in Rule 31A. Therefore, the TDS amount deducted in March 2026 should have been deposited by 30th April and the TDS statement, whether it is 24Q or 26Q, etc., for the quarter of financial year 25-26 should be filed by the coming 31st May of 2026.
So, the due date for filing is very near. Now, I move on to the next question. What will be the consequences if TDS amount is not deposited within due date and TDS statements are not filed within due dates, sir?
Yeah, it is very important. The TDS amount deducted from payment belongs to the central government. It is money kept in trust. Deductor is merely a custodian holding it temporarily. Thus, strict provisions are there for late deposit of TDS. Number 1, late payment interest is charged under section 2011A of the Income Tax Act at the rate of 1.5% per month from the date of deduction, not due date of payment, till TDS amount is deposited. And secondly, such defaulters may also be prosecuted if TDS amount is not deposited before the due date for filing TDS statement of relevant quarter. That means, if TDS statements are not filed within due date, there will be late filing fee under section 234E at the rate 200 rupees per day, though it is capped to the TDS amount. Penalty under section 271H of the Act may also be imposed for failure to file TDS, TCS statement on time or for providing incorrect information in them. It ranges from Rs 10,000 to Rs 1 lakh.
That are quite serious consequences. Now I move on to the next question. What challans are to be used for TDS payment pertaining to financial year 25-26?
Now, Amit, since we are talking about financial year 25-26 and it's quarter 4, the old challans as prescribed in Income Tax Act 1961 will be used.
Sir, now we would like to know what are the common mistakes made by deductors while making TDS payments?
I have observed a number of mistakes being made by the deductors. I would like to point out some such mistakes. Number 1, sometimes there are mismatch between the section under which TDS is deducted and sanction mentioned in the TDS challans by the deductors. Then they mention assessment year where actually they should be mentioning financial year. And the third, there is a mismatch between the challan amount, that is the amount deposited in the government account and the deduction amount shown in the books of account. The deductor should take care to ensure that the challan amount includes interest under section 2011A in case of late payment.
Sir, deductors have the liability to file Q4 statements to show these TDS payment pertaining to quarter 4. What are the common mistakes observed in filing such quarter 4 TDS statements?
It's a very important question. Some common mistakes made by the deductors are like they mention invalid or inoperative PAN. Then there may be PAN name mismatch. I mean, a name in PAN is different and that they show in the TDS statement is different. Then we sometimes observe mismatch between the challan amount and the amount of challan shown in the statement, causing reconciliation issues. They mention incorrect section code, then mentioning of assessment year as I mentioned earlier instead of financial year. This type of mistakes occur both at the time of challan payment as well as at the time of filing of Q4 TDS statement. Another is short deduction. I mean TDS deducted shown at lower rate than the applicable rate. Incomplete filing of details in Annexure 2 of Form 24Q of 4th quarter. This results in salary mismatch, that is failing to give deduction or exemption as claimed by the employee. Wrong mentioning of challan serial number and date of challan is mentioned wrongly sometimes.
So what are the other mistakes?
If PAN is not available, TDS is not deducted at higher rate by the deductors, which they are legally obliged to do, then incorrect challan taking and then missing deducted entries. Most of these issues can be avoided through timely reconciliation.
So these are very important points that deductors should keep in mind. Now moving to the next question, what are the consequences of such mistakes in filing Q4 TDS statements?
Now, wrong filing of TDS statement has consequences for deductor as well as deductee. Now, for deductor, PAN mismatch results in default seen in Traces portal while processing of TDS statements. Possibility of higher TDS rate becoming applicable, which causes financial and legal hardships. Creation of demand due to short deduction, short payment. Interest is charged under section 2011A of the Act and the need for filing repeated TDS correction statement. It leads to additional compliance burden on the deductors. Late issuance of Form 1616A by the employer because of requirement of filing correction statement. In cases of invalid PAN, there will be delay in generation of Form 1616A and consequently penalty of Rs 500 per day under section 272A 2G of the Act. And for deductee, wrong reflection of TDS credit in their Form 26AS, deductee grievances which leads to refund delays, mismatch in actual receipt and TDS claimed in ITR filed by deductees and what is reflected in Form 26AS. This mismatch may also result in selection of cases of such deductees for scrutiny assessment and generation of incorrect Form 1616A.
quite serious consequences, sir.
Yes, Amit.
Sir, what are the most crucial areas that government deductors should be mindful of to avoid TDS defaults and non-compliances while filing TDS statements?
We have seen that government deductors often rely on tax professionals for reporting compliances, but the DDOs must ensure some checks like ensure proper BIN Form 24G matching, reconcile TDS with treasury records figures before filing their statements, verify PAN accuracy of deductees, use correct section code, and valid nature of payment, review traces defaults and justification reports that get generated on the traces portal or previous quarters to avoid accumulation of year-end defaults.
I think these will be very helpful for the government deductors in avoiding mistakes. Now, in relation to TDS on foreign remittances, what are the most common yet significant omissions observed by the Income Tax Department?
Well, the three most common yet material errors observed in respect of foreign remittances in the area are 1. Failure to properly determine taxability before remittances, that is, whether the sum is chargeable to tax in India and applicability of double tax avoidance agreement, that is DTAA, or what we call tax treaty. Second, incorrect or incomplete reporting in TDS statements Form 27Q, mostly regarding PAN of non-resident deductees and the nature of payment. And third, mismatch between Form 15CA CB and Form 27Q is another recurring and significant area requiring better control and review by the deductors.
Sir, what are the specific high-risk areas for Q4 TDS statement filing?
Now, I would say care should be taken while deducting TDS in Q4 and filing the statement for Q4 TDS. I would like to say that caution should be exercised. Like there is requirement of TDS against provisions made in last quarter or month of the financial year. Reconciliation should be made with the books of account and the amounts shown in TDS statement. Deductors should ensure that no payment escapes TDS. If TDS statements are not filed accurately, this will lead to objection by the auditor in Form 3CD that is filed with the income tax return.
Thank you, sir. Now, I'd like to know what are the best practices which deductors should follow while filing TDS statements?
Well, I would urge they can take a number of steps, Amit. For example, they may undertake verification of PANs to avoid TDS demands due to applicability of higher rates. They should do correct annual salary computations. There should be proper consideration of exemptions and deductions claimed by the employees. Download and review traces default summary. Reconcile books of account vis-a-vis TDS deducted. Reconcile challan payments with the old task data. There is a functionality available on the system for such kind of corrections. Check TDS statement of last 3 quarters as I suggested earlier, and file Q4 statements after reconciliation, especially in case of salary. File correction statements for earlier quarters if required. File correction statements as soon as mistakes are found. Such deductors should not wait for communication from the Income Tax Department. And also, please avoid lost day filing to prevent portal-related issues.
Yeah, I'm sure this checklist will be very helpful for the deductors in reducing their compliance burden and mistakes. Now, I'd like to know what documents should be kept in support of the TDS statements.
Well, there are a number of such documents such as invoices of expenses, copy of agreement like rent agreement, a lower tax deducted certificate where we deduct TDS at the lower rate, documents from employees in support of deductions, exemptions allowed by the deductors, auditor certificates wherever applicable. I would suggest that filing of TDS statement should not be treated as a routine filing exercise, as filing of inaccurate TDS statements consumes time and energy of deductor, deductee and the department, besides having financial cost. Correct filing of TDS statements results in correct tax credit to taxpayer, deductees, smooth refund processing, reduced grievances, better compliance of the laws, avoidance of statutory consequences, and last but not the least, avoidance of financial loss due to imposition of interest, penalty and prosecution.
Thank you, sir, for this insightful session. It has been very helpful for all the deductors. And for all the deductors, I hope you will be able to comply with Q4 requirements, and slowly we are moving to a new income tax regime, and then we'll have no such issues, but we will be dealing with the new income tax provisions. Thank you.